What is going on? So my name is Somesh. I'm a full-time day trader, and today I made about $8,488 trading three different stocks: QQQ, SPY, and Tesla. Let me break it down for you why I took the trades and everything in detail. All right, so this is my P&L 8488. Super grateful to be in a position where I can do that. But at first place, I did risk about individually on all three trades. As we go, I'll also let you know how much I risked about, but you can say overall on the day, probably my risk was like 2,500, 3,000 max, but still risking 3,000 to make that 8,500 bucks. It's still way better than, like the risk to reward is pretty good, right? But let me break down the trades, why I took the trades, my thought process, how was I thinking in the real time, so you can do the same as well, right? Three trades, as I said: QQQs, I did puts; SPY, I did puts; and Tesla, I did puts again. Now, let's delete this, and I want to start off with talking about my time frames that I use to trade, okay? Because here's the thing, all right? I only, if you think about it, everyone has a different style, right? Everyone has a different trading style. My trading style says for first half an hour, let's say from 9:30 a.m., which is New York time, to 10 a.m., I use 2-minute time frame to execute. Okay? Why? Please, that's what I do, right? I've tested this enough. From 10 a.m. to 11 a.m., I use 5-minute chart to execute. And for my after 11 o'clock to 3 p.m., I use 10-minute chart to trade, and 3 p.m. to 4 p.m. when the market shuts, I never ever trade. A lot of people call this power hour, right? Oh, power hour trading. I just don't like power hour trading. There's too much going on, and I'm like, if you cannot make money here, like, what's the point? Essentially what I want to do is I want to make money here, like 9:30 to 10:30. I want to be finished. Max 11. Like, I want to go spend my day with doing the things that I love and actually having my freedom, the stuff. Like, the reason why, because here's the thing. Like, you have a job, right? This is your job. You have a day job, 9 to 5. You go at work, you wake up 7 a.m., you get ready, have breakfast, 8 a.m., you leave the house to get to be at your 9 a.m., you finish work at 5 p.m., you come home at 6. By the time you get fresh and everything, it's 7 p.m., you have a beer, dinner, and go to bed. That's normal job, right? I'm not like, that's normal people job, right? The reason why I started trading at first place was I didn't want to live this life, right? So I don't want to do like where I wake up 7 a.m. like I do now. I start trading at 9:30. I don't want to just repeat this, finish trading at 4, journal my trades by the time, like where's the freedom gone? I want to trade till 10:30, 11. I want to journal my trades by 11:30, and then I have whole day to myself doing the things that I love, right? Spending time with my family, talking to my parents, they're still overseas. The stuff that I enjoy doing, that's what I do. Like, I enjoy building businesses, right? That's what I like. I enjoy reading books. That's what I like. I enjoy watching some TV show. That's what I like. I enjoy spending time with my wife. That's what I like. And what's the point of just like trading whole day? I mean, you have 6.5 hours to execute one trade. But if you cannot find a trade, personally what I think is, if you cannot find a trade in first 90 minutes of trading, it's just not your day. Just call it a day, because there's a lot of opportunities that happen, especially when you know how to trade, especially when you know the sort of things that you should be doing in order to get to the next level, if that makes sense, right? So let's talk about the trades, the reasons, the mindset, the stuff that I was looking at, why was I looking at them at first place, and all those nitty-gritties. And I'll start with why was I watching those this particular trade at first place, right? And we'll go bar by bar, and I'll break down the trades bar by bar, slowly and slowly. All right, I don't want to just be like, oh, I entered here, exited here, done. I want to make sure that this time that you have you could be doing anything, but you're watching this video, which I appreciate. I absolutely fucking love it that I have your attention right now. I appreciate it. I want to make sure it's best return on investment on your time. All right. So let's go over this. Every single morning, I make my plan on 1 hour chart. Like, I love 1 hour charts every day to make my plan. That's how I trade. Okay. Before the market open, every single day, 1 hour chart. That's how I look at the markets and everything. So in the pre-market, I made these because we were gapping up. I made these like levels, 426 level, because the pre-market, right? This is where stuff was. Let's go and have a look. All right. So 426 being a critical level, I marked this. 427, 428. I know QQQs. Just maybe it's time to take a note. QQQs love trading every $1 mark. All right, it just loves the every $1 mark. So 426, 427, 428, 429, 430 was the levels that I was watching. 421, 20, 19, 18, the levels I was watching towards the downside, right? This is what I was doing. Now the levels are done. I'm ready to trade. And first, what do? First 30 minutes of the market open, I stay with 2-minute charts. So let's go and wait till the market opens. And here we go. Now, try to pay attention to this one thing here that before the market opens, right? Before the market opens, I always pay attention to what's the market doing in the pre-market. It's one of the most important things that you'll do as a day trader, right? Because you want to know exactly the trend that's setting up in the pre-market, the stuff that's going on in the pre-market, and why are we kind of setting up this way? Like, what's going on? You want to understand the picture behind the trades, or picture behind every single stock before the market open. Like, what's SPY doing? What's QQQ doing? Mostly these are the two names that I pay attention to before the pre-market, just before the market opens. So I was looking at this QQQs and I was just like, okay, this looks decent, because right here we have a highs, then becomes this like kind of a lower high. You see this pullback, then this becomes, well, a kind of, you can say, low. This is lower high, this is lows, and then we made a new lower lows, and then this is lower highs again. But if you look at this, this is where the trend, like, this is a downtrend. Yeah, this is a downtrend. How does downtrend fails? Downtrend fails when we break out of this. So we failed the downtrend here. Like, the swing high was broken. When the swing high breaks, that's when it knows that, okay, the trend has failed. Now let's see if we can push towards the upside, right? This is what I was watching. But at the same time, I was like, okay, if this level doesn't hold, okay, if this level where we are holding, because right at the next candle, we made a high first. Like, at this candle opened here. By one stage, this candle was green because it was going towards the upside. So I was like, okay, this is cool. Why? This is cool because here we have a lows. Here we're trying to make higher lows. And this point right here is the critical point. And this point right here is the critical point for the trend. Like, this is what the trend goes. The moment this fails, okay, the downtrend will start again because this trend didn't hold. Does it make sense? I'll break it one more time. The trend works like this. For the trend to reverse, it fails the previous highs, previous lower highs. It fails, and it failed here, right? And then it holds, okay? Then it makes a new high, which it did at this place. This candle was green at one stage, but what happened? Sellers took over, and they're like, this level is again, like, this level was critical. This level is critical as well now, all right? Because this is lows, this is high lows. If this fails, the trend gonna reverse, and that failed. And now I'm like, oh, the trend failed, and this can go towards the downside. That will be super interesting. But I always watch this 200 moving average on my charts. This is 200 simple moving average. Please don't ask me in the comments, why is that not an EMA? Why is that not exponential? Man, that's like why not? Like, bro, what? That's a simple moving average. These are my settings on this simple moving average. Okay. I always pay attention to 200 simple moving average for whatever time frame I'm watching. So I was like, okay, oh my God, it broke the 200 simple moving average. And if it breaks the 200 simple moving average, I'm like, oh my God, okay, this is cool. This is weak. This is really weak. And that got me excited. I'm like, all right, sweet. We broke the trend thing that was forming. this looks good. But I am a sort of trader. I never enter on like big move. Like if there's a big move happened in the market, I never enter on those. Like I explained this, right? I never enter right here. I always wait for a pullback. I know because the way the structure of the stocks work, there is going to be a pullback, right? And same thing happened here. We made a big move. I knew there's gonna be a pullback. Maybe not here, maybe here, maybe here, but there is going to be a pullback, and that's where I want to enter for the downside. I don't want to enter just when the premiums at the peak levels. Like, why would I do that? Especially when you're trying to trade the same day expiration on QQQs or SPY or whatever, right? So I'm like waiting for a little pullback. I'm like, all right, if there's a little pullback, we'll see. And then just the next very candle, we tried to break the 200 moving average. We couldn't. We tried. It went up, but the sellers took over. The 200 moving average is sitting at 424.86. It closed, this candle closed at 424.84. And I'm just like, oh, this looks sexy, right? So roughly around this next candle, what I did was I went short. Next candle opened, I went short. With my stop loss just went above this particular candle, right? Now, what about my profit target? My profit, I always tell everybody, pre-market low levels are very critical levels for you to take profits. Like those are very important levels. People ignore pre-market lows and pre-market highs. Those are important because I do pre-market analysis and I base my first trade off that. Pre-market lows are super important levels. So I was watching this. I was like, okay, if it goes down here, if I'm entering roughly here, if it goes down there, I'm going to take some profits. Like I'm risking roughly about, like at this stage, I'm risking about, look at this. I'm risking about 45 cents to make 80 cents. The risk to reward made sense to me, right? And I jumped in my position size. I was like, okay, let's see. And I probably risked about, I think I risked about maybe $400 on this trade. No, actually, maybe a little bit more, $700 on this trade, roughly. Just look at the percentage, all right? I made about $1,800, nearly $1,800 on this trade. But what happened? Now, the reason why I got into this particular trade, as I explained, was it was weak, and I was like, all right, this looks fucking cool. This is where the stop loss is going to be. This is my entry. This is where the profit target going to be. Everything looks good. And this is one rule that I use for every single trade. Where's your entry? If you cannot define it, do not just enter in the middle of nowhere. Where's your exit? If you can't define your exit, which is your stop loss or your profit target, because exit comes into two different ways. One is your stop loss, one is your profit target. Right? If you cannot define your stop loss, don't enter. And then the third thing, just asking yourself, does it fucking make sense? Like if I'm risking 45 cents for an 80 cent move, that makes sense, right? That makes sense. But if I'm risking 45 cents for a 30 cent move, that makes sense? No, that not make sense. So I'm not going to take that trade. So I asked myself, does it make sense? It just made sense, right? So what I did, I shorted here. Next candle, boom. It went 424. It kind of went below it. I took profits. Took profits. Boom. Executed. Beautiful trade. Now this might be like to you, oh my god, but it didn't move that much, Samesh. Bro, that's an 80 cent move. That's a quick move. This is a 2-minute chart. That's a quick move. And if you have ever traded 0 days to expiration, you get paid on this stuff. This was like 30% trade. You see what I'm saying? That means, if anybody doesn't know, that means if you put $1,000 into this trade and this trade made 30% returns, that just means you made $300 profit of $1,000 position size, right? Make sense? That's how things work. Beautiful trade, beautiful executions, perfect executions, and traded pretty well. So now, this is done. QQQ trade. I will give 5 out of 5 rating. Everything was like pretty accounted for. Everything was beautiful. Now, the next trade that came was SPY, right? I was watching SPY, same thing in the pre-market. I was watching it. I'll try to break down the pre-market trend for you a little bit as well, and then why I entered and where I entered and how I managed the trade and all sort of stuff, the stuff that I do. Let's break it down. Somebody told me that I have this thing in me that I can break down really, really hard topics into very simple stuff. I don't know. Let me know in the comments. What do you think? I think I can, but let me know. You see what I'm saying? Let me know as well. Now, all right, so let's look at SPY trade and the reasoning why I took the trade and all sort of stuff as well. But let me know in the comments though if I can break down hard stuff. I'll make it look too easy. All right, now this is SPY 2-minute chart, and I took this trade around 9:58. Okay, insane trade, absolutely insane trade. Let's go over 9:58. First, I'll break down the pre-market. It's kind of the similar stuff as what happened on QQQs. We started making a little downtrend. Then this structure broke here, but still we went down and the volume picked up. So I was watching this. I was like, all right, cool, whatever. But I was trading QQQs at this time, so I didn't take SPY. I traded QQQs, but I traded this around this 9:58 mark. Like, beautiful, looks beautiful, right? I traded after this, all this happened. This is when I'm trading it. Now, what happened here is we made a big move down, right? And I'm just like, oh my God, this will be very interesting if we make a pullback. And now we are making a pullback. Looks beautiful, right? It just looks almost a no-brainer at this stage. And then I'm still waiting for my entry, but I'm waiting for this ATMA tap. I'm waiting. There's one thing that you gotta know. Confluence. If you don't know what's the meaning of confluence simply means when there is more than one reason for you to take the trade, right? When there's more than one reason for you to take the trade, here there's two reasons for me to take this trade. The first reason here is ORB. What's ORB? The range of first 15-minute candle, right? First 15 minutes, this was the highs, this was the lows, this is the ORB level. It went back. This green line right here is the ATMA. It tapped this ATMA. We are kind of making a little flag at the bottom. It looks beautiful. So I'm just like, okay, make this move. This is a one flag, second flag. I'm like, this looks interesting because what do I have to risk here? This is the question you should ask yourself. My stop loss can simply just go, if I'm entering a trade here, my stop loss can just go above this confluence level where they both are sitting at the same price point. So I'm risking about, think about it, right? I'm watching this $500 mark, or first I'm watching this 501 mark, 501. As I said, every $1 move on these names, very important. So if just for this, I'm risking about 20 cents or 16 cents to make $1.20. That means you risk $16, and if that worked, you make $120. Makes a lot of sense. The next level that I had was 500. Now look at this. I'm risking 16 cents to make literally $2.50 move almost, right? The risk to reward just made sense, like a lot of sense. By the way, everybody in the chat, everybody in my team ate. We all ate this with this stuff. You see what I'm saying? Look at this. And I'm not trying to fucking just say, oh, join this, da da da. No, I'm just showing you what happened, right? Alright, so if you look here, 12:05, which is 10:05, because I'm in Australia right now. So yeah, 5%, $120. That's 100% on SPX. This is SPY's trade that we took, same trade. 243, 9%, 10%, $350. We all print money, man. Right? The reason why I'm showing you this is this trade worked. This trade was an insane, beautiful trade, and we all printed. And now on this SPY trade, there was literally nothing that we were risking. Initial profit target was 501 at that stage. And now I'm in the trade. I'm in the trade now. I have all the reasons to enter. As I said, multiple reasons. I know the stop loss. I know the profit target. I know my entry. Why would I be scared? Right? Boom. Hit 501. Huge profit already. But this trade was about 100% trade. And I risked about, in total, I risked maybe about $1,200 on this trade, but I made a lot of money. So basically this was a 100% trade. What that basically means is, if you are a newbie and you do not know, if I put $1,000 into this trade and it turns a 100% trade, that means I make $1,000 profit. That means now my trading account, instead of $1,000, it's $2,000 with options, just like that, right? And then we pulled back a little bit. There's no reason to sell because we already took some profit. Now we are holding runners. For runners, there's one thing that you can do for your runners. One is you take your profit at the profit target. Second is, like, I took half off here, right? I took half off, beautiful. My other half, if I entered, let's say at $1.28, right? If this is my entry for the option contract, which is $128, and now the contracts are trading at 1.6, if it ever goes back to 1.28, I'll literally get out. Basically break even, exit. If it hits break even, I'll exit. Here, it never hit break even, so I was still in the trade. Boom. And it started going down. We broke that $500 mark. Beautiful. Now this turned out a over 100% trade. This is exactly where we took profits. The moment it broke 500, I was like, get out. It's beautiful because we are going to bounce here because of insane amount of volume. Buyers are coming in, and hardly ever you'll see big critical level like this 500 break at the first time. Like, look at this. Yesterday, what happened? The first time when we went and touched this 500, it just doesn't work this way. It's a very huge psychological level. It just doesn't work that it touched and it's just gonna break. It went, what happened? It bounced, and it bounced off heavy. You see what I'm saying? Does it make sense? That's exactly what happened today. Went and it bounced off heavy, but we were out of the trade anyway, so we don't care, right? Beautiful trade, insane trade. Yes, you could have caught reversal, but we caught reversal on the other name. Now these are the two trades, beautiful trades, but then the third trade was Tesla, right? I traded Tesla, made about decent money. The first kind of trade that I took resulted in a little bit of a loss for me on Tesla, but then what happened was I jumped in again because the first time you took the trade didn't work. That doesn't mean, again, if the trade is setting up, it's not going to work. I jumped one more time and I made decent amount of money, and let's go over that as well. Okay. And this will make so much sense to you. You'll be like, oh, this is what he was explaining and this is exactly what's happening, and I fucking love it, right? Let's go with this. I just broke down to you. I just broke down how the trend works, yeah? How does the trend work? Trend goes like this. How does the trend reversal work? When we break this highs out, pull back, and you can take a trade towards the upside because the trend broke. The trend structure failed. So now it's super trendy, as you can tell. Like, it's super trendy. It went from literally the highs of the days are like 185, lows are like 177. It's super trendy and it's super nice, right? Let's look at how and where we took the trade. I didn't take the trade anywhere near here. I took the trade at 10:35. But that, again, it was a 5-minute chart. Why? It's after 10 o'clock. So
it's 3 o'clock.
It's super weak. At this stage, this is super weak. Boom. And this is what's interesting. This is what I want you to pay attention to, because this really will hit home for you and it will be worth your time even watching this. Right? What basically happened was, here the structure says that it's super weak. Here we bounced the first time. This is where we bounced the second time, and then we are bouncing now, right? If this particular level breaks, that means it's reversal setting up. It's the trend's reversing, right? Because that's how the trend works, like I explained, right? So let's see how this goes. And it broke out of this. What does that mean? That means the trend is gone. Goodbye. But as a sort of trader I am, as a sort of trader that you should be, you should wait for a pullback, right? I waited for a pullback. The pullback has pretty low volume compared to the green candles that we had, right? This red candle has pretty low volume compared to the green candles. I was like, okay, if it can break above this 80 MA, if it can break above this particular candle one more time, I'll jump in. Stop loss will be just below this particular candle. Sorry, other way around. I'm like, okay, stop loss would be just below this particular candle. I'll jump in. My profit target can just go 180 or 179 initially, then 180 probably next. I'm like super excited about this, right? Now, what happened is the next candle broke. I jumped into the trade. I'm like, all right, sweet. Let's see how we go. Boom. What happened? It hits my stop loss. I exit. Hey, nothing. I never take nothing personal in the market. I tried, didn't work. I'm gonna try again. No problem. I'm still watching the same level. I'm still watching the same stuff because now all of a sudden this looks extra sexy because of this wick. This is the lows. This is the higher lows. This is the highs. This is the new highs, like higher highs, higher lows. I'm like, okay, man, this looks sexy. So I'm gonna try one more time, see if this freaking goes. You see what I'm saying? And my profit target was like 179.5. I would be happy with that, right? Stop loss again goes to the same price point. I'm risking about 80 cents to potentially make $1.20. Yeah, some of you might be like, yeah, that's not very good. To me, it's good because my strategy, my price action, the way I watch the charts is way different because my win rate is heavy. Right? My win rate, of my strategy, my system, the structures is very, 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 very fucking good. When my win rate is good, I'm happy to take trades where I'm risking 83 cents to make $1.15 because my win rate is very good. You see what I'm saying? So what happened? I took the trade, right? I'm like, okay, cool, I'll enter. And this is how the trade went. Insane, right? Insane. And this was, again, a 30%, 30% trade. Beautiful trade again, right? But this is how you trade. That's how you make money. You have a structure, you use the structure, and you enter based off a structure. Again, the reasons why I entered on this particular trade is number one, the trend structure break, right? Number two, I tried once, I failed, but the second time it looked even better. So you can say second entry, which looks even better. The third, we not only just reversed trend, we also started making higher highs, higher lows. So new trend forming. New trend started forming. So I was like, cool, I'll take this. And as I said before, I do not like to trade past 11. If I do trade past 11, I have to be like the stock chart has to be looking really, really good for me to keep trading. But because I was already up very decent amount of money, I was like, yeah, whatever, man. I don't really care at this point. You see what I'm saying? And I sold around this point. Like it was, yeah, not gonna lie. The big reasons why I sold around here was to give you the full source. It was kind of yesterday's low right here. Like this is where yesterday we were holding areas. Like this area was getting held very, very well yesterday. So I was like, yeah, I'll just take it. You see what I'm saying? Now, these are the three trades. And I took my time breaking down these trades. Let me know in the comments down below if you enjoy this stuff. And a subscribe to the channel will be very freaking good as well. Let's freaking go. Let's get to the next level. And I'll try my best to do these videos more often. Or if you enjoy them, let me know in the comments down below as well. And yeah, let's go. And I'll see you soon. Peace.